welcome to the LA Venture Podcast. This is Minnie Ingersoll, host of the podcast and partner at 10110. 10110 is a seed stage fund here in LA. All opinions expressed on this show by me and my guests are solely our own. Today's episode of LA Venture is sponsored by SaaSoft. Offering customized software development for your startup's needs, SaaSoft is a group of top software developers all based here in Los Angeles. If you are looking to build a new product from scratch, or if you're a founder that needs help accelerating product development, SaaSoft can help. With SaaSoft, you'll get the personal attention you need to make your product a reality in 2021. Head to saasoft.com, SaaSoft, for a free consultation. Jamie Montgomery is the co-founder and managing partner of March Capital. Earlier this year, March announced a $450 million Fund 3. Congratulations. Prior to March, Jamie was the founder and CEO of Montgomery Co, a well-known LA-based investment bank. And of course, he is the host of the Montgomery Summit, which will be in its 18th year this year. Jamie, thanks for coming on the show today.
Well, thank you.
I feel like a lot of people in the venture world, the startup world, know you as the host of the Montgomery Summit. But I would love to start with a snapshot of Jamie Montgomery as a teenager.
For us as investors, we always want to have our entrepreneurs tell their story. And you learn a lot about their motivations and interests. As the youngest of 6 boys, my father was a Caltech PhD, a true rocket scientist who was an executive in the aerospace industry and spent time in the Kennedy administration in charge of all the strategic nuclear weapons. Came to Los Angeles as a young teenager as he joined a startup down here in the aerospace industry in the 70s. And so I went to Palisades High School, and which was a great change of pace from growing up in Seattle, and stayed here through University of California, San Diego. And through that period of time, I was always interested in business and interested in technology. In that the aerospace defense industry was the large tech sector here. And interested in entrepreneurship. I always was a journalist. I always edited the paper no matter what school I was at. I started a couple businesses in high school. Century City had just been built, and this friend's father came home and says, they have this new law in California. It requires you to have a fire extinguisher in your office, or houses before they sold had to have smoke detectors put in. So there was a wide open opportunity after this California legislation in 1976 or so to go in the fire systems business. So we made a boatload of money one year in high school doing this, but what I didn't realize that fire extinguishers need to be recharged after about 6 months or a year. So of course I gave out my home phone number. So all these people were calling my mom asking, where's Jamie? And I had a living room warehouse full of fire extinguishers, and I had this long tail maintenance issue where I guess everybody makes some money off of, but I would go over once a week to East LA to a Granger warehouse and pick these things up and go deliver them in Century City. And it was a heck of a business.
And this is when you're in high school still?
Yeah, gave me something to write about in my college apps. I always had to be busy playing sports, editing the paper, doing this or that.
Fascinating.
Oh, it was fun though.
Sounds like great fun. So you went from selling fire extinguishers to starting an investment bank, or what next?
I went to University of California, San Diego, graduated in 1981. I spoke this year at graduation, and I commented I was honored 40 years after being on academic probation to be their graduation speaker. I'm not sure everyone thought that was as funny, but it was a real world. It was a bell curve and grading. If you did well, you did well. If you didn't do well, you didn't do well.
Why were you on academic probation, if I may ask?
I started off being a physics major, and it was an unnatural act. But after 4 years there, I had the opportunity to go to Cambridge in the UK for graduate school. And I finished graduate school at a young age of 23 and went in-house in the Pentagon. And that was an eye-opener. And when I was there, I was given this one assignment that was Chief of Naval Operations says, all right, Jamie, it's the Navy's turn to host the Joint Chiefs Long-Range Planning Conference. I'd like you to organize it, come up with a plan for it, come back in a week and, give me your thoughts. I said, okay. So I go down to the Pentagon Library and look at the proceedings of the previous several sessions. They just seem really boring. They all talk about how they would plan and all this sort of nonsense. So I said, look, I got an idea. We'll host it at Annapolis. We'll pick a common theme, and then we'll use that as a basis for workshops and breakout sessions. It sounds interesting. So what's the theme? I said, I don't know. I'll think of something, So he kind of looked at me. I go, come on, give me another week. So anyway, I had a free ticket to go anywhere I wanted in DC, basically, working for him. So I went over to the White House, over the CIA. What do you got? And it really didn't have much. President Reagan was president. I went to see National Security Council members. Oh, yeah. Trying to find something interesting.
Yeah.
I went over to NSA, and we drive in and we go to see the Lieutenant General. He's a 3-star at the time. Now it's a 4-star bill, head of NSA. And I go in and, so what do you got? He's expecting something a little more formal. Tell you what I got. I got the collapse and fall of the Soviet Union. I said, well, that's good. So he was pretty sure the Soviet Union was going to fall. He had his premise and laid it out. This is 1983. Not many people would have that point of view. He had it. The president at the time, Reagan, felt that way, and very few others did. And that became the premise of the morning session, and led to some real kind of discussion about what should your force structure look like in a post-Soviet world. But that led to some very interesting discussions, and that led to elevation of exposure of me. And then I ended up in the Deputy Secretary of Defense's office. And it turned out he was leaving to go run a merchant bank. And he thought the analysis was really interesting. And if I was right like that in the private sector, we could make a lot of money. And I was trying to figure out a way to get out and go work on Wall Street anyway. So I thought, well, this sounds great. And that firm became a predecessor to Carlyle Group. And I got this great opportunity in merchant banking and did that for 3 years. And then by that time, I was 26 years old, moved back to Los Angeles, and I wanted to work in technology and finance, and there's really nowhere to work. So I started up my own firm. LA in 1986, largely aerospace and defense, trying to move out of aerospace and defense into consumer, I remember. And then once the Cold War was over, 91, 92, I said, no, I'm done with all the defense stuff. Close that chapter, and which sort of closed. You never quite leave that world entirely, but we move on and just focus on what we thought would be next, which was communications, which became the internet. And then we started to scale up the organization. And I eventually ended that run and sold off the banking. I kept the investment side of that, and then used that and combined with Samant and some others to form March Capital and take that capital base that we had there. But really, I had 25 years of working with entrepreneurs to help them scale their businesses and be capitalized properly to look at their strategic options.
Do you think there are a lot of differences between the venture world and the investment banking world, or do you think there's a lot that the venture should learn from banking?
I think 25 years ago, being on the sell side, being a banker, doing deals, we just had incredible talent. We go recruit up against the top firms. And now someone coming out of school wants to go work at a Google or an Amazon or something. And in those days, we were able to get the top grads. And we really had an information advantage. The internet really leveled the playing field with data, lots of data everywhere. Sometimes bankers will often, and we were very careful not to do this, but really just bend their view of things to get a deal done and compromise. And they're focused on getting a deal done. And if you're on the principal side, people obviously have to put money to work, but that's not really our first priority. Our first priority is to really just find the right opportunity and just be more selective. Both are very demanding. I think there was incredible discipline in banking and how we looked at risk. And we'd always look at any opportunity and understand the risk associated with it and what the probability was around various outcomes. A good bank, you're always competing for capital allocation in a bank, and you really have to understand what the return on capital is from an activity. And I think oftentimes a number of the venture investors, particularly the later stage where it's more important, the growth investors, don't really have as much discipline there in capital allocation and that training of risk. And that's something that we really focus on at March Capital, is that we'll look at any investment and we'll look at a risk curve around 3 different outcomes. So the management case, the downside case, and the upside case, and what would influence that, and what are return profiles, and assign risk parameters around that.
And you just made a bunch of hires. Do you look for that investment banking background when you were hiring?
I hired 7 individuals this last fall, and 3 of them at the vice president level. And one was a young gentleman from New York who was a venture capital investor for several years, young partner at a firm. And the second one, she's a lady who was just finishing up HBS, but it's been a couple of years working for a venture fund of funds back east, doing directs and fund investments, and been an entrepreneur before that. And the third was a gentleman who worked for me at Montgomery and then spent the last 6 years at Allen & Co, who was an incredible analyst and very personable.
And how do you think about what you want to keep for yourself versus hand off when you're calling your existing portfolio companies or meeting new companies?
I think those calls I always have somebody with me, so they're learning, they're watching. So you have a half hour, there's a couple minutes of personal check in. And it always surprises my team that I know the individuals well enough to ask about one of their kids or something that's important to them. Somebody's on the board of a museum, you go look and see what the latest exhibit is on there and compliment them on it. And then you ask about their daughter and how's her job going. And by that time, they'll do anything for you, right? I mean, it's like, you made a hard meeting really easy. Yeah, we're doing a portfolio review right now, and it's a very intense process. And, I was complimenting the team on it, says, looks great. And I'm so happy that, I'm not going to spend any time on it this weekend. And it's a very important thing for us to do, but they've got it nailed. They've got it. And so I think it's a question of spending that time up front. I spent 2 months onboarding our team this fall. It's interesting. I talked to some of the younger team, and in a certain age group, they're used to having a lot of feedback, weekly 360s, affirmation. And I said to them, look, affirmation is when I give you something to do because I trust you. Affirmation is when I take you to an important meeting because I trust you. Affirmation is when I give you responsibility. And that's affirmation because you're giving them responsibility. And I think once they figure that out, they're like, wow, okay, that's more powerful than some participation trophy, right? I mean, it's like the real thing. And I think it's important to, step back and say, okay, this is what we're trying to accomplish, and probably over communicate on the front end. Some people just are too busy to be organized, and I'm not that person. I call time out a lot. We're not going about this right. So let's just figure out really how we want to do this, and then we can go do it. I don't want to get in a butter churning competition here. And then that's hard, right?
The concept of calling time out is great. I'm just thinking I need to apply that to my life a lot more.
Well, because it's hard. The pandemic has cut down on our travel, right? Obviously, and it creates more challenges and more opportunities. And one of the opportunities we should all look at is time management and how we spend our time. We have everyone has time and money, and some people spend far too much time thinking about their money and not enough time thinking about their time. Like, how am I going to be worth X? And I'm like, whatever. I want to figure out how can I go play golf on Friday afternoon. Right?
Yeah, sometimes I don't have time to go surfing. Why did you start March?
I had a lot of unfinished business at Montgomery Co. We built a big firm, and by 07, 08, we had over 100 people. We were incredibly fast growing and profitable, very profitable, one of the highest paying banks on Wall Street, prestigious. And we just got hammered 08, late 08, 09. And I think our business dropped like 85%. And it's really hard to maintain a business that falls that much. I mean, it's just really hard, right? It's almost like this pandemic, and it was hard to reinvent ourselves. And we sort of made it through and landed the ship. But I really thought about it and said, if I do this again, which I did, is I want to really invest in a platform that's sustainable and that we can scale up, that has a recurring revenue stream. So we really turned March Capital into a real profit machine that can continue to scale and grow over time.
But that's March, which is different than Montgomery. Or do you see it as a little continuing some of the work, like you're still investing capital in?
Yeah, we're investing capital. We're helping build the innovation economy. We probably think out 3 to 5 years of things we want to accomplish, but maybe execute on a plan over an 18-month period of time, which is a normal fund cycle. And our biggest constraint, like any other startup that we work with, is leadership. And so how do we develop that next cadre of leadership, and where you just feel like, wow, we got so many good people that there's no way we're not going to win. And that's what we're at right now. It's like, there's no way we're not going to win. If I was competing with us, I'd be scared. I'd be going for second place, or third place. And that's what we were at Montgomery at our peak. And that's where we are now. We just got this momentum, but you had to build that over time.
Sure. And let me make sure I just have the basics of March. You're investing 10, 20 million into the Series A, B, C?
Yeah, we'll probably put in 20 to 25 into a company on average. The first fund, we invested $240 million in 30 companies. So the average was obviously 8 million. The median was probably quite a bit higher. But if you looked at what worked, the early stage stuff didn't really work. And it worked for some people that weren't really great at that. What worked were helping companies that had a product market fit scale up. And we had some really big returns. That's probably a 3.5x fund, which is great. We returned 2 times the fund already. And the final close was in 2016. So it's not that long ago.
Yeah, the headline was something like, how did March Capital get $1 billion return on one investment?
Yeah. So that's a good headline. And it's true. And then, so the second fund, we invested $300 million in a little under 20 companies. So we really put in most of the 300 million into 14, 15 companies, about 20 each. Fund 3, we've either invested or committed to invest about 160 million in 8 companies. I think Fund 2 is really exceptional, and we had Crowdstrike in there as well as by far our biggest investment. We have at least probably 7 or 8 big winners in that fund.
And can I pause and just ask about Crowdstrike? And when did you invest? Why did you invest? How did you get into the round?
I went and visited George Kurtz in the early 90s down in Orange County. He had a company called Foundstone, and hosted him at our summit, got to know him.
This is the CEO of Crowdstrike.
Yeah. And then he sold it to McAfee, spent a few years there. After McAfee, he started a company, and Warburg wrote the check for him, $25 million for half the company up front. And it turned out to be the best investment Warburg ever made. They made $7 billion on that investment. And then Excel led the B round. And about that time, we got in business at March Capital. So I went down to see George, and I was preparing to lead the C round. And at that time, it was, life intervened. My wife was diagnosed with a cancer at that time. It was pretty serious. And so I said to George, look, I want to lead the round, but Annabelle is sick, and I've got to spend the next 6 months focused on getting her well and get her through this. And I'll put a little bit of money in, but I'd like to lead your next round. He said, fine. I was sitting right at the desk where I'm sitting now. We had this conversation, spring of 2015. After the round, every quarter I'd sit down with him, and then he gets ready to do the D round. Google led that round, and I put some money in. It turned out really well that round, but the next round was actually risk adjusted, made even better. So I talked to George and I said, what do you want to raise? 100 million. So I sent him a term sheet. I said, I'll put in 25 to lead it. And he said, fine, we agreed on it. And that was the D round. And I showed it to Excel. Samir says, listen, great deal. I want to lead this. I go, Samir, look, you take my amount, my terms, everything we agreed on here, you can lead it. Well, I don't care. So Excel led it. Yeah, what do I care, right? So then the E round comes around, it's Samir and I go, let's do this one together. And the round's coming together, and progress, and a lot of interest in it. So I wasn't quite sure what was going on. And so I said, all right, George, what do you want? And so I wrote it out on one piece of paper. Amount, it was like a $200 million at a 3.2 billion pre, a 1% equity, 3% equity pool increase, something or other. 4 paragraphs, really simple. Samir does the same thing. He's so easy to work with. And Samir, I think the world of. And so that looks good. All right. So I said, Samir, this is what he wants to do. He says, yeah. And I said, but you and I probably shouldn't lead it because we need someone new. And so we sent it to GA, and they put it on their letter and sent it in, and we did the deal. Right? We wanted to bring IVP, and we brought them in as well. No, everyone says GA led it, or IVP say they led it. Well, I don't know. I'm pretty sure I wrote the email.
$1 billion return is $1 billion return.
Exactly. And everyone's like worrying about who led it, who did this or that. We have incredible relationships with firms that we're not on the board of, that we didn't lead around. And I find you just have to get to a point in life where people return your phone call and want to spend time with you, and you're adding value. And if that's the case, you can, I think we got 17 times our pro rata on that Series E. And you get that because of the relationship. And then we invested in the IPO on top of it. So it's a complete parade, this one. It's fantastic. And we love it. We bought 6.8 million shares for about $70 million. And those are worth about 1.5 billion today. So we really made much more than $1 billion on this investment. Yeah.
That's great.
There you go.
Okay.
Who cares who led it, right? But I think the thing is, George is an extraordinary entrepreneur, and he deserves all the credit. He's got an incredible team around him. There's a half dozen members of his team who could all run, public companies. And it's a great culture, and he's great. And it's been an absolute pleasure to work with him. And, I really just love George and the team there. And look, the thing is, if any of these individuals at this firm or other firms have an issue or a family problem or something, I'll drop everything I'm doing to go help them out. And they know that. And we've done it many times. And that's much more important than anything else. And when you have those sort of relationships, that's what leads to these outsized returns.
Yeah, and I hear you giving George full credit for what he built, but you talk about working with your portfolio companies to help them scale up. Are there certain tactics? Are there certain ways you lean in to help them scale?
Well, the first thing you got to do is understand their style and cadence. So you're not getting in their way. And we're certainly, are very careful about that. But I think at the end of the day, there's some advice that we can give them, lessons learned. Oftentimes it's about building their organization. It's coaching and mentoring, helping with direct sales, going on sales calls with them. I love going on sales calls with them. I remember we'd go visit cities, just go on sales calls. And yeah, that was fun. We just go pick a city, go there. Let's go call some CEOs. And I mean, not many VCs do that, right? George, where are you going to be? Let's go see some, I'll meet you there. We'll go see some people, It's like, okay, in London or New York or, Wichita. I mean, Atlanta. I mean, we'd have fun. I mean, and sales calls, so it led to a lot of customers for them. Because we have a big Rolodex, might as well use it. Being a sounding board. If there's something that has to be taken care of, George would call me up and ask for something and say, I need some help on this, and I'd say, all right, George, I got it. All right. I'd put down the phone and say, I have no idea how I'm going to do this. I'd pour myself a drink, think about it for an hour, and then I go find out how to do it. I get it done. I mean, there were like amazing things, right? And I said, George, I got it. Right? I got it.
I love that.
I mean, I don't know how the hell I'm going to do it, but I got it. And you got to do what you got to do to help these companies. And your ego has to be subverted to their cause. No one might ever know that we did it. And it's not a lot of hot air, people dropping names or doing this shit. It's like, okay, very surgical, boom. What's happened?
So you're kind of, behind the scenes on some of this stuff. And yet the Montgomery Summit is this huge stage and super important in the LA ecosystem. Maybe we could just talk a little bit about what's coming up March 3rd and 4th this year.
And so the summit was really an opportunity for us at Montgomery to convene our clients who are CEOs of companies with investors and corporate execs, and things, would come out of either financings or M&A.
And this year looks like a great lineup, but of course it'll all be virtual.
Yeah, look, it's unfortunate, love having you at it, Minnie, but it is what it is right now. And so we're trying to figure out how to do it virtually in a way that is impactful. And so we've come up with a revised format, and the content should just be stellar. And so whether you've got Eric, from Zoom, founder of Zoom, he's going to have a conversation with John Chambers about why he had to leave Cisco to do this, and what were the key trade-offs he had to make as he built the company. I mean, it should be a great conversation. Bill McDermott, who's the fourth after the founder, CEO of ServiceNow, which is one of the world's most important technology companies. Just confirmed CEO of Honeywell, who's probably the world's leading industrial software company. Darius Adamczyk, who's a friend as well. And
I love that question for Eric about why he had to leave Cisco to start Zoom. Are there any other really good questions you hope to ask this lineup of great guests?
I've asked Carmine DeCipio, who's the CEO of EY, Global Business, to interview Bill. Sometimes a peer-to-peer conversation goes a lot better. I think you got to find something that's interesting and appealing to them. I think, for example, with Honeywell, is industrial world has been very slow to adopt technology. The OT world and the IT world just really haven't converged. There's been a lot of hope that would happen, but not much really has happened. And why is that? And I think Darius will give us some real insights into that. I think if we go back in the tech world to the 70s, there was a closed stack. You had Data General, IBM, Wang, and they were closed systems. And when you had a onset of Oracle and open data, then you could start building a tech stack with best of breeds. It blew it all open and created this tremendous innovation and interoperability. And I think you're starting to have standards now in the OT world, the industrial world, operation technology world, that will enable that to happen. But you're sitting there saying, God, this might have been a false positive trying to work in the industrial world. It's 30% of the GDP in many countries and still walking around with clipboards. Or is it, hey, are we on the dawn of a big industrial 5.0 finally, and enabled by AI and 5G, and it's really going to take off? Or is it a head fake? So I think you got to have an authentic conversation. Why hasn't it happened yet? A lot of us have spent tens of millions of dollars trying to build industrial software companies, and we're not having to show for it. And then 5G with Cristiano, he wants me to interview him, which is, I'm honored. I'm also something else I got to prepare for, right? But it's what is 5G for the average person? What does it mean for a corporation? And what am I going to do differently that I can't do now? And we've heard a threat from China. How real is that? And There's a real conversation around that. Yeah.
Yeah.
So anyway, so we got all this incredible lineup of top CEOs, and then we have like 20 companies that are kind of worth over $1 billion, or the kind of pre-IPO track. Then we have 16 tracks by sector. Then we're doing a program on geographies with Silicon Valley Bank. Then we have a growth track of companies that are looking for expansion capital, another 15 companies there. So it's quite a rich program.
Yeah, sounds like it's going to be a great summit. Let me switch gears a little and talk more about being part of the community and building community. I know philanthropy is important to you. Do you think that business has an obligation to do more?
Yeah, no, I think business absolutely can and should and must play a role in increasing the envelope of participation in the innovation economy. And, too many people think that the government's going to solve the problem, but in effect, the government is the problem. It's blocking a lot of the reforms in the financial world. If you want to build low-income housing in LA, the government gets in your way. So it's not like the government's misintended or anything. It just doesn't have the flexibility and the competency to do it. And so, we sort of pick and choose where we get involved, where we think we can get leverage. There's my personal philanthropy, which is significant. And there's stuff we do at March Capital. The stuff we're doing at March Capital is very focused on community building, whether it's, the Venice Clinic or the people concerned addressing homelessness, community health. Yeah, that's then youth programs, youth training programs. And then, personally, I have some other things that we do that might include, youth programs, programs for women, a big lot there, women's health, just kind of women in general, women's health, and just women's well-being, and then faith-based organizations. But it's about finding a good entrepreneur in the philanthropic world who approaches it the same way an entrepreneur might in the business world. They see an opportunity or a challenge. They feel like they have a unique skill set. They can put together a service offering, a product to address that. And the best ones are great storytellers too, and they can rally people.
Jamie, you are a great storyteller, and I could ask you questions for hours, but I imagine you have things to do and a summit to get ready for. So let me just thank you so much for coming on the pod today.
Yeah, well, it's thank you for your time and good luck. And, I hope we can find ways to work together. And thank you, Penny.